Welcome back to the channel. My name is Patrick, and this is going to be part two following the video released recently about pole and flag strategy that I've been using. Okay, I wanted to talk about what I'm seeing right now with the current price action here. Okay, there is a move here. I'm going to talk about it at the end of the video, but I'll just give you a quick recap on how I did yesterday using the strategy, and then we'll talk about this because this is quite important. It's something I've learned just watching this price action currently. Okay, so let's look at what happened yesterday. So this is the start of my session around here, roughly where the London session starts, somewhere around here. So what I was looking at as I looked at this price action here is that we had our breaking structure. Okay, let's see, do we need to zoom in again? Yeah, that will do. Okay, so we had a little trend here. So we had a new high, a higher low, higher high, higher low, a higher high, and then it reversed here when it broke this low here. Okay, so I'm going to mark that out. That's our first break in structure. So identifying this moves, I really just been looking at it and looking for some kind of indication, right, for the reversals. What I tend to find is you get that fake breakout first, then a break in structure. So you need this fake breakout. So here, this isn't a fake breakout. This is equal highs here. Okay, these here are equal highs. Okay, so in that for me is I wouldn't base a trade based on these equal highs. Basically, I don't trust equal highs because price likes to run equal highs or equal lows before it goes in other direction. Okay, and the reason I believe that is because for price to go down, it needs to buy up first. Okay, so that tends to be how the market moves. So price to go up, it needs to buy down first. So you're going to see that a few times. So what a good way or simple way to identify that is with this fake breakout. So you got the fake breakout and reversal. Okay, so that's the first thing we're looking for. Once it pushes down here, we're looking to see if this is going to start a new trend. So what we want is for this to pull back up, tap into this pivot point where it turned around and push down again to create another pole. So that's our first pole, that's the first flag, that's our second pole. Once it's done this, I am now interested in trading this flag here. Okay, so I want price to pull back into this zone, yeah, and then I'll take my trade. So my entry could be at the breakout point here, just here, or it could be 50% of this flag. Okay, so depending on the zone, I may take the breakout, I may take the open, I may take the breakout point, which is here, or I may take 50%, it depends. But this was yesterday's trade. I do believe I took the, what's it called, the breakout point here, and I caught the move, right? So enter here, and TP, this is something I really wanted to talk about, TP. So previously I said our TP should be based on this move here. Okay, so our risk is here, 7 pips. So if I was to go to a 1-to-1, I want 7 pips ideally, and I get it there. Okay, but what I've been looking at is what's the best TP. Okay, so 1-to-1 is good here, but what I'm looking at based on what I'm seeing currently with the price action, maybe the best TP is when this leg out, when it breaks out to do the third pole. Once you get this third pole here established here, I think in the future I just need to backtest it a few more times, get a bit more experience with this strategy. I think that's where I'm exiting now. Okay, so it's a 1-to-1 in this case, but in some cases it's not a 1-to-1, and I think I've got examples to show you which is playing out currently. So we'll look at that in a second. So we could do 1-to-1, or we could do just a break of this low here, okay, and get out there. And the reason is this is going to reverse back again. It needs to sell down before it comes back up. So we know we're going to get that move there even if it's going to reverse on us. And for me, that's good enough. It's a one-to-one in the situation, and also it's yeah, it's good enough. Basically, I don't need that much, you know. The other way you could play it is to zoom out and look at where you are in price on the higher time frame and look at the next opposing force. So the next opposing force from this entry point would be this unused demand zone. Okay, so anything from under this point where price has not visited is the next opposing force, which could take price back in the direction it came from. So as you can see, it came here, got underneath it, then it started bringing it back. So that's the other way you could take TP. Okay, so you could go to the next opposing force, you could go to one if it makes sense, or you could just do the first leg out, okay, as soon as it breaks that low. Okay, so as soon as it creates that third pole. Okay, so we had our first pole, a flag, our second pole, our entry is there, and our third pole. As soon as it breaks and creates this third pole, you could get out. And the reason again is if it's going to reverse from this point here, it needs to sell down, then come back up. Okay, so that's what happened yesterday. That's the trade I took yesterday. I was also able to catch this move. So I had a very good day yesterday. I made about 2% on the account. So this is again what I was talking about. Look, so it came here. Remember, we're in demand now. Price pushes down here and it pulls up. Okay, so that's our fake breakout like we had up here. That's our fake breakout. It pulls back up. So what happens then? What we're looking for now, if we're going back up, is for price to pull back to this zone from this pivot point, respect it, and eventually break out again, which it did when it beat this high here. It broke out again. So that's our trend being established. So one pole, a flag, a second pole, and I'm looking to enter based on the second flag. So like I said, you could enter at the open here, or you could enter at roughly 50%. So 50% in this case would have been a better entry. Our stop loss conservatively would be, ideally would be under this flag here, but sometimes it can pull all the way into the zone. But what we don't want is for it to disrespect this this low here. We don't want it to go further than this low here. So our maximum stop loss in this situation, this scenario, is 16 pips. So base your leverage or your size based on 16 pips. You could do one-to-one to get 0.5% on the account or 1% account. That's all dependent on your appetite, okay, your risk appetite. So with this move here, let's say here that we're basing the move on this, and we want that third leg out, that third pole. Okay, so our entries here, the tops here, it's about 5 pips, and we want it just to break above that zone, so 6 pips. Okay, so if we enter there and we want it to break just above that zone, 6 pips is RTP in this case. So we're being flexible with the market, which makes more sense than having fixed or idle TPs based on what you want. I mean, the market doesn't care about what we want. It's going to give us what what it wants to give us, and we should take what's available and duck out. I mean, just leave straight away. Get what you're given and get out. Okay, we are small fish in a big pond here. We need to remember that. Okay, so 6 pips, that's enough for me, and I think that's how I played that move. I can't show you on this account because this is a new account, because I had to pass a evaluation stage, so this is a new account, so I can't show you my exact entries, but I did take this trade, and I did take this trade here. Okay, so that was my 2 trades. There was another one here, but this is all news. This was a news catalyst that drove this down, and I wasn't interested in doing that. But you can see it plays out the same way. Pulled, breaking structure, pull back into that pivot point, eventually broke structure again, pulls back into this zone. You could enter there and potentially held through to get TP, maybe. But I didn't trade that because that's news. It's not really my forte to trade news anymore. So that's what happened yesterday. So what I wanted to talk about is this move that's taken so long. I'm not in it. I've just been looking at it, and got me reevaluating, my entries and my TPs, as you may have noticed. So consolidation here. This is roughly the London's open, and it pushes up based off this demand here. Pushes up, pulls down. So it pushes up, taking that this zone here, all the TP stops that may have been here, not the TP, the stops that may have been here. It pulls up, and instead of continuing up, it comes down, flags up, and comes down again. So that's a fake breakout for me. Pulls down, flag, first pole, second pole here. This move here, it's our second pole. So we are now interested in this move to for this flag here to create a third pole. So entry, when I was looking at this, an entry is based off this zone here, okay? So this pivot point, it could have been this pivot point, but I prefer this pivot point here because this is in line with the actual move. So pole, flag, and pole again here. So waiting for price to come and tag us in. As you can see, it did it there. And if we did a one-to-one based on this price action here, so one-to-one based on this price action here, so from this high here to that low, that zone is 10 pips. So if we did a one-to-one based on that, entering here and went for one-to-one, we would still be sitting in this move at 9 pips. Okay, so looking at this, it got me thinking, the best thing to have, what I could have done if I was playing this move, was just to wait for this breakout here. Okay, because that breakout here is enough, because for me that's, what's that, 9 pips, right? 9 pips, 10 standard lots, $900. That's enough for me for a 1 day move. That's more than enough. And as I said in previous examples, this could be the start of a reversal. So it could break here, reverse here, hold in this zone, and push up again, which is what it's attempting to do. Whether or not it's going to do it, I don't know. It's sitting around for a long time. If we are waiting for a one-to-one, we are looking at price getting down to here. As you can see, it's only like 1 pip away from it, and it could still do that because, and our stop loss is all the way up here. So that would be a one-to-one. Okay, risking one, that's a one-to-one. Okay, so if you're risking 1%, that's 1% there. Okay, so now the reason I also said the best thing to do in this scenario may have been just to get out here is, if you look to the left here, what we have is an unused demand zone, and that's where it's stalling. So it's in demand now, and it could hold it here and potentially send it up from here, and it takes it to beat these highs here, and it takes it higher to put it back into this zone here where it was sent down from. It could do that. We don't know what's going to happen, and it's still playing out now, so I don't know what's going to happen. It could continue this trend reversal and push it further down, or it could reverse here and start that trend there. We don't know. So what's the best thing to do? Instead of speculating, looked at this zone and just taking TP here at 9 pips instead of waiting for 10 pips. Okay, remember we are in demand, so this is dangerous. It could be turned around from there. So it makes more sense to have just taken it here, taking TP on that third leg out, and be done with it. So this is a video for those, it's just a little bit of a hint or tip or something I've discovered recently, and I wanted to share this with you guys. Maybe it's something you're looking at and it's something to take into consideration. It's just the way I'm seeing the market right now. Hope you've appreciated that. I am sharing all my insights as they develop. We're going to see how this plays out, whether it gets to this TP down here or it reverses, and maybe I'll give you an update. But this is something I'm considering, and the easiest thing for me here with 9 pips here, I could have got TP here, made 1% just on 6 pips, just there. Okay, so maybe that's in the future one going to do, just getting out on this leg out or getting out on the opposing force. Okay, this next opposing force, which makes more sense than having a fixed TP based on 1-to-1 or 2-to-1s or whatever you think the market owes you. Okay, the market doesn't owe you nothing. Get what you can and get out there as soon as possible, especially if you are scalping. If you're swing trading, none of this matters. You're looking at H1 and you're still probably trying to take this move all the way down to here, so it doesn't really matter if it comes all the way back here. So if you're scalping, take what you can, get out and call it a day. Keep it moving, keep it simple. Yeah, so hope you've appreciated this. This is Patrick, and until next time, peace.